Hey guys, what's good? I'm Andre and today I want to walk you guys through part 2 of yesterday's video, which basically was a couple of trade ideas. Now today I want to show you how I would do the same trade ideas and what you guys should be looking for. So without further ado, let's just jump into Webull and have a quick look. So guys, the first one that we were discussing was a bullish idea for XLE. Now again, XLE is the sector of the S&P that's responsible with energy. Now obviously with the price of oil and some other energy stocks getting a pullback last week, we've seen a pullback in XLE, but I think that if we look at the 150-day moving average here, the red line, we can see that there was a clear resistance numerous times from this same exact line. So I think that this not only confirms the horizontal support that we're seeing over here, or support resistance ranges basically, but also the actual 150-day MA. And if we look on the weekly, guys, we're gonna see that there's this 30-day move exponential moving average that's really confirmed by what action we saw last week. Now ideally I would really love to wait another day to have a green candle here before we can jump in and potentially have the MACD curl over a bit more, but let's look at what I would actually look at in terms of my trade, guys. So I'm probably gonna go out further than the 15th of July. By the 15th of July we still have 20 some days, but not enough anymore really, so I would probably go out to the 19th of August for this one. And what I would want to do here would be to do a bullish spread, and it's gonna be a debit spread, guys. So I will be looking at the delta here, and honestly looking at the trade, I think I'm probably gonna run with a delta of 0.43 over here. I want to have a higher delta, so in that frame of mind I might even go with sort of $33, so a delta of 0.5, and then I'm gonna sell a call after buying this one. So let's just show you guys what that looks like. We were at XLE, so again we're gonna go out to August and we're gonna buy a call at first. Now it's gonna cost $435, as you guys can see. Obviously we're not gonna take that much risk, especially nowadays with the market environment that we're in. So I want to write a call as well. The spread is $5, so it depends how much you pay for it and how much you make. Like that's gonna make a total of $500, and ideally we pay $100 and make $400 and have a 1-to-4 risk reward ratio. So with that in mind, I'm gonna go out here to, again, a $5 spread, so 35 plus 5, that's 73, sorry, plus 5, that's 78, so 228. And let's see what this looks like. And it's actually not gonna be by far a 1-to-4 ratio. Actually it's $200 worth of cost and $300 worth of profit. Well, I don't dislike it, and I'm gonna tell you why. I think that for this stock or for this ETF to move back to $73, it's gonna take it very little. Let me actually measure this on the 4-hour time frame. So we just needed to move up less than 1.7%. So we're basically telling this it moves up 1.7%. We're already starting making money. So with that in mind, I think this is a good trade. Now the break even is gonna be $75 here. This is important. This is the break even by expiration, guys, but we do not plan on keeping this all the way out to expiration. We're planning on keeping this for the stock, or in this case the ETF, to have a chance to move a bit higher as soon as we are roughly 70% in the profit from this $300 total. So let's say that we're at 210, I would take that profit off the table immediately. Similarly, if this trade moves against us, I would not for the love of God wait and lose the whole $200. I would probably exit as soon as we close a candle below here. So for instance, if we close a candle at, let's say, below both these levels, I don't want to be stopped out, so I want to make sure that I'm below both of them. So let's say $69. So at $69, the max we probably are gonna end up losing is somewhere in the realm of probably $50 to $70, I would say. I would not hold this for longer because I want to make sure that I'm quickly in and out, especially with the way the market is moving nowadays. Now, if I recall, the second example or the second stock that we spoke about was Boeing. With Boeing, it's gonna be exactly the same scenario, but reverse basically, because we are bearish on it. This will not only make us money if the stock goes down, but obviously if the whole stock market goes down and takes Boeing with it, we're gonna make some money, we're gonna make some profit. So the trade that I'm about to show you here is a fantastic trade for you to learn and have in your arsenal for bear markets, not just this time but for all of them, for as long as you're gonna be trading. So we're gonna do exactly the same, guys. Looking at Boeing here, I really think that I would love for it to go back down to this line here. This is our target of roughly $117. We don't need it to go that low. So with that in mind, I'm probably gonna buy a put at 135. I think we can go 132 just because it's a bit further out of the money, or rather in the money on the put side right now, and I would rather pay less than more. So with that in mind, I'm probably gonna do 130, 125 spread here, again $500 spread. So let's see what this looks like, guys. We're gonna pay 147, so I already like the risk reward ratio a lot better with this one. We're gonna go with 147 and we're gonna be making $553. As you guys can see, if the stock moves up, if Boeing reaches $150, we lose more money. So this is gonna make money as the stock moves down. It's gonna be a very similar situation if Boeing here will green candle here or a full candle at roughly $144. It means that it not only breaks our blue resistance line here, it also breaks the horizontal resistance line. So I'm out. I'm not gonna hold the trade for more or for longer than I need to. So what was the threshold again? 144 roughly. So at 144, guys, let's say 145 to be on the safe side, to have some margin. We're probably gonna end up risking again anywhere between $35 and $70 risked. And then on the other side of things, as soon as Boeing starts moving downwards, I am not gonna wait for it to reach $117 and bounce back, because I don't want Theta to be against me at that point in time. I don't want anything to be against me, or Vega maybe. I want to be able to be quick, sharp on my feet, in and out. So with that in mind, as soon as Boeing reaches pretty much the middle of the threshold here at roughly $130, I'm probably gonna go out. So at $130, we're probably gonna make somewhere in the range of $73 to $100. It kind of seems like this is not as efficient right now, and this is because we actually went with the smaller delta. But I kind of feel like if this one were to retrace, just the Vega and the speed of that will probably gonna make this a lot more juicier for us faster. The max gain anyway, guys, is $353. So I would probably end up actually exiting this one at roughly $150 to $200. I just want to make sure that I have enough of a hedge in case the market pulls back. And as I was telling you yesterday, I am expecting the market to maybe have still a positive week this week and sort of wobble around. Maybe it can even go up to this level over here, but after that point I still think that the market is gonna end up over here, roughly $260 for the S&P. Obviously different setup, but very similar. So again, with the S&P as well, I think it's probably gonna end up maybe over here at 3950, but then I do expect it to correct back to the 3500 or maybe 3560 ish. So with this in mind, guys, I hope today's video is helpful for you. Please subscribe if it is. Please let me know in the comment section below if you have any questions. More than happy to answer any of them, and I'll catch you next time. Take care.